You're looking to safely leverage your savings, right? And how do we do this? What are some of the concepts? You've probably looked at bank on yourself strategies and you're wondering, okay, what is this life insurance or whole life insurance plan? How do I use it? My name's Eddie Gartner. I'm with Epic Financial Strategies. And in today's video, that's exactly what we're going to get into. We're going to talk about how you build a whole life insurance plan and then how you can use the money in there to safely leverage for other opportunities. So the first thing we got to talk about is how are we setting up this life insurance plan and what are we really using it for, right? So I was just having a conversation the other day with clients and, they were looking at utilizing a whole life insurance policy in one manner, but what they were really focused on was something completely different. So what you want to think about is, what do you want your policy to do for you? Do you need that access and liquidity up front in the policy to go leverage for other investments? Or are you looking to gear your policy more towards legacy? In doing that, there will be different designs. So that's one of the first things when we sit down with clients is we talk about, well, what are the things that are important to you and how can we best utilize this as a tool in your overall financial mosaic? Once we have those details and, based on what you're searching for, you're looking to utilize the money that's saved in there and you want to be able to safely leverage it. Well, how are we going to do that? The easiest way is we first want to build a policy that builds cash value quickly. And having that access to cash, the way that we're going to do that is in the form of a loan against the policy. What's happening is that the insurance company is giving you a loan or collateralizing the value of your policy up to that net cash value that's available. So the earlier and quicker we can build that cash by overfunding our policy, the quicker we can go and leverage those dollars to use for other investment opportunities that come our way. The tricky thing with a life insurance loan is depending on the carrier, there's going to be different rates. And most of the time, it's going to be a variable interest rate. But that's not the real challenge. The real challenge behind leveraging the dollars out of there is that you are now having this interest rate that's charged and they're not sending you a bill every single month to pay it back, right? So there becomes some self-discipline issues with this where if you're leveraging this money the right way and you're wanting to use it for more and multiple investments on and on, that rinse and repeat model, you really want to work to get the money back into the policy. But what's really great about leveraging the money out of the policy is that it doesn't stop growing inside of the policy. Well, what does that mean? If I take $20,000 out of my life insurance policy in the form of a policy loan, I now have this loan and loan interest that needs to get paid back. But with the right company and the right design on your policy, you're going to continue growing that money that's inside the policy as if it never left, because it really never did. What happened is the insurance company gave you a loan against the value, but your money remained inside of that policy and that continued compounding growth happens. What that allows for is it allows you to take advantage of arbitrage in that borrowing scheme where, the idea is you're borrowing at a lower cost and your compounding growth is at a higher rate. So you're making that spread in between or that arbitrage. And how that gets even better is if that investment opportunity that you have is a cash flowing asset, meaning you've put money into this and now it's returning you cash every single month. Well, you could take a piece of that cash flow and send it back to your policy. And this becomes the smartest way to take and leverage those dollars because you're not leveraging it to go on vacation, although you could. You're leveraging it to go invest in another opportunity. That opportunity is cash flowing for you, and that cash flow from that investment is paying you back. Now you're getting multiple rates of return on the same dollar. So depending on when you're watching this, you might have just recently gone through one of the biggest economic events that's ever happened in our country's history, right? And in the world's history. We had this closing of the country and of business, and a lot of uncertainty around that. And many clients, what they were able to do in this time of uncertainty, right before the government gave out loans and before there was all this relief that came along, there were people that were scared and struggling, and they went to the savings that they had inside their life insurance policy, and they leveraged those loans to keep their business afloat, to keep their employees paid, all these different things. So yes, you can use it for cash flowing assets. Yes, you can use it for vacation. There's a whole lot of things that you can use it for, but you could also use it to keep your business going, right? And there's many, many stories of people that have done that. If you're somebody that watches YouTube a lot, you probably see people asking for comments. And the reason we ask for comments so much is because that's what YouTube uses to help push you up in the algorithm, to help get your content seen. So please, if you're watching this video, you like this video, and you're looking at, well, I'm thinking about implementing a life insurance policy. What do you want that life insurance policy to do? Go ahead and type in the comments. Are you looking for cash and access, or are you looking for legacy, right? And think about one of those two things. Just put that in the comments, legacy or cash. And if you're wondering why am I asking that, if you remember back to the beginning of this video, we talked about policies being set up the right way for what you're looking to try to do, right? So this is never a one size fits all. This is not a one right policy or one best thing to do. This is, what are your intentions for your money? What are the things that you're looking to do? So with a life insurance plan, if you're looking to safely leverage cash, well, how quickly do you want to do that? And so what happens is, if we're trying to accelerate the cash value, a lot of times we're trying to minimize that death benefit. That death benefit can represent legacy, right? So when we're looking at legacy, do we want to leave more of a death benefit, or do we want to minimize that and have better access to cash early on? These are a lot of different ways that we can structure that policy. So think about what's important to you. Is it the cash today? Is it the legacy in the future? Or is it some happy medium in between? If you're ready to take the next step and get some more education on life insurance plans, we have a course that you can go to. Click the link that's down in the description block. We're going to teach you about how to build the optimum amount of wealth with little to no out-of-pocket cost to you. Also going to go through a couple other concepts, one of them being the velocity of money and that multiplier effect to your dollars. It talks a lot about safety and leveraging the dollars inside of the policy. Go ahead and click that. It's 100% free, and you can have access to that today.